Alright guys, so the new month is officially upon us, and what better way to kick it off than with a dividend portfolio update. Today we'll get all caught up to speed, and I'll show you everything like my best and worst performing stocks for the month, all of my recent purchases, and we'll discuss what my upcoming plans are for the portfolio here in February. But before we get to that, in case you're new to the channel, my name is Ryan, and here we strictly talk about dividend stocks and how you can invest in them to create passive income and reach financial freedom. So if you love dividend stocks, and if you're on a mission to retire early, then hit that subscribe button. I'd love to stay in touch as we both continue to grow our portfolios and collect that cash flow. Also, leave me a comment below and let me know what's been going on in your portfolio this last month. Were you up? Were you down? Did you hit any crazy dividend income milestones? Did anything cool happen in your portfolio? I want to hear about it all in the comments below. Getting into how my portfolio performed this last month over here on my dividend portfolio tracking spreadsheet, which you can start using for free. There is a link to download the spreadsheet in the description of the video. But anyway, starting with my main taxable brokerage account on Charles Schwab, this has it valued at about $55,500, which is an all-time high for this account, guys, and it's been just unreal to see the growth that has occurred in this portfolio and really across the market as a whole over these last few months. Just over the last 3 months, from November 1st until today, this account has seen a rate of return of 14%, which is unreal, and this amounts to about a $6,600 gain in this time period, and this doesn't include any of my own contributions. This is just share price gains and dividend income. And out of that $6,600 gain we just looked at, January only contributed about $680 to that, so November and December were by far the heaviest months. But still, I'll take what I can get, guys. It really wasn't a bad month overall. I mean, we still saw about a $480 gain in share price, along with a nice $194 or so in dividend income, with some of my highest dividend payments in January coming from Altria Group, who paid me $50.15, and I got another big one from KRC, who paid me $41.58. Now, if you want to see the full breakdown and see all of my dividend payments from this last month, then check out the video linked in the pinned comment. I go through it all there. Anyway, getting back to it, the gains from January represented a 1.24% rate of return, which, as we can see, underperformed the three major indices. The S&P was up 3.34% in this time period, the Dow was up just over 2%, and the NASDAQ was up 3.5%. But on the bright side, I did manage to outperform SCHD in January. The holy grail of dividend ETFs was only up 0.9% for the month, so we squeezed out a little bit of an edge there. And if we zoom out looking at the performance over the last year, we're still seeing some pretty substantial underperformance in this time period. My portfolio was only up about 9.9%, just under 10%, which is not too bad in its own right, but this pales in comparison to the other three indices. The S&P was up 24.6%, the Dow was up 16.6%, and the NASDAQ saw a whopping 37.2% gain. Still though, I am outperforming SCHD over the last year. Once again, the holy grail was only up about 5.5%, so I am glad to see that I'm at least outperforming something. But anyway, switching gears and now getting into my best and worst performing stocks for the month. My best performer throughout January, believe it or not, guys, was actually Verizon, who saw a 10.8% gain after reporting their quarterly earnings, which apparently was well received by Wall Street. Although Verizon's revenue was down about 0.5% compared to the same quarter last year, it still came in above analyst expectations, and the company also reported strong growth in their wireless unit, which helped the share price surge as well. However, even after this gigantic gain, I'm still seeing quite a big loss with my Verizon position. It's my second biggest loser, actually, behind AT&T. The two telecom companies have not been that good to me, so in terms of share price, I'm down 17.25%, but dividends have really helped with this position, and on a total return basis, I'm only down 5.6%, which is really not too bad. Now, my second best performer in January was the newest position to my portfolio, Visa, who saw a nice 6.4% gain in the month of January after also crushing their quarterly earnings. Not only did Visa beat on both the top and bottom line, but their revenue saw a near 9% gain year over year, which is fantastic. Now, January was my first full month of being a Visa shareholder, and I've got to say, things are off to a pretty good start. I'm up about 4% just in the last few weeks, which actually, as I'm saying that, is kind of a bittersweet thing, because on one hand, it's nice to see that gain in share price, right? But on the other hand, I'm still actively buying shares of Visa every single week, and I'm planning on doing so at least for the foreseeable future. So as I'm doing that, I would prefer to not see a huge run up in share price, because I'd like to be able to get as many shares as I can at the lowest price that I possibly can. So I'd even hope for a pullback from Visa, but I don't know, not holding my breath on that one. And then lastly, guys, my third best performer in January was Procter & Gamble, one of my favorite companies, one of my largest positions, and once again, they also put out some favorable earnings with an improvement in their gross profit margin, making the headlines for the quarter, which is always welcomed. It definitely feels good to hear that your companies are becoming more profitable. And I gotta say, my position's looking pretty good, guys. I'm up 13% in terms of share price, and then throw dividends in that calculation on a total return basis, I'm up about 17.5%. So all three of those did pretty well for me this last month. And now on the other hand, talking about some of my poor performing stocks, really the only one that was down a notable notable amount was KRC, who did see a substantial drop in January. As you can see, they're down about 8.7% in the last month, which if we look at my position officially puts me in the red in terms of share price. I'm down about 2%. Not a crazy loss, but it came very quickly. But on a total return basis, I'm still up about 4%, so nothing to be concerned about. But anyway, moving on and getting into all of my buys this last month, it really wasn't anything crazy. In terms of individual companies, I only bought 2 different stocks throughout the month of January. The first of which is Starbucks here. I invested $463 into Starbucks and added 5 shares to my position, which as you can see leaves me with about 45.5 shares. And I am so close to reaching 50 shares of Starbucks that I'm just going to keep buying a share every single week until I at least hit that. So we'll be there by the end of February for sure. Plus the current share price really isn't too far off from my average cost per share, so I don't really mind buying here. The next stock that I added to in January, and actually the bulk of my investment dollars went to this one, it's Visa. I invested about $1,600 into Visa and picked up 6 shares, which is great because buying 1 share of Visa every single week has really helped me redeploy this cash that I've had sitting on the sidelines in my brokerage account. And I'm going to continue putting that to work and throwing it into Visa throughout the month of February. And when it's all said and done, I think by the end of the month, I should have, 10, 11, maybe 12 shares of Visa. So that'll be something to look forward to. And that was pretty much it in my taxable brokerage account. But as far as my Roth IRA goes, as you guys know, I'm investing into SCHD and VU every single week, rain or shine, whether the market is up or down. I'm dollar cost averaging into both of these ETFs and certainly did so in January. With SCHD, I invested about $420 and picked up 5.5 shares, which I think puts me ahead of the game for 2024. My goal for this year is to finish the year with at least 100 shares of SCHD in the Roth. And right now I'm sitting at about 56.5 shares, and I'm adding over 1 share every single week on average. So I definitely think I'll hit that 100 by the end of 2024. And as far as VU goes, I only invested about $240 into this ETF and picked up about half a share, which doesn't seem like a lot, but this is a pretty expensive fund, guys. It's about $450 per share at the time I'm recording. At any rate though, when it's all said and done, it ended up being a pretty nice shopping spree in January, and in total I invested $2,718.10. And with that, now moving on and taking a closer look at my Roth IRA, to close out January, this is sitting at $7,260.85, which means it saw a nice little jump in value throughout the month, but all of this increase I think came from my own contributions. I invested about $660 or so, it looks like. And in terms of market gain, I'm down about $33.50, which is interesting because it still shows my money weighted rate of return is up almost 2% for the month, but then in dollar amount, it's down. So I don't quite know what to make of that. But zooming out, looking at the performance over the last year, things are still looking pretty good. I'm up about 12.75% in this time period. And looking at the all-time performance here, I'm up closer to 20%. So this portfolio is crushing it. And now looking at the combined value of both of my accounts, if we take my main taxable brokerage account, which is valued at $55,500 and is generating $2,337 of annual income, and add that to my $7,260 Roth IRA that's generating just under $200 of annual income, this brings my total portfolio value to $62,809 and my dividend income to $2,529, which is a pretty nice jump compared to this time last month. At the start of January, my projected annual income was $2,473, so we've gained about $60 in projected annual income just in the last 30 days. Also, real quick, if you want to see my full portfolio and keep track of all of my trades and all of my dividend payments as they come in, then shoot me a follow over on Blossom. I've been posting regularly on Blossom for the last couple of months. It's a really positive and uplifting community of investors who are sharing their investment ideas and sharing their portfolios, and being able to join in on that has just been awesome. The app itself reminds me a lot of Twitter, but with like a portfolio tracking component added to it. And I've got to say, I enjoy being on Blossom so much more than I enjoyed using Twitter. It's not even close, and I think you guys will feel the same. To download the app, just click the link in the description, and to follow me on there and see my full portfolio, just search for Ryan. Anyway, switching gears and taking a look at my watch list, I actually didn't make any changes to the watch list in the last month. The only company that's left sitting on here is Rollins. With the addition of Visa, I'm pretty happy with where all of my holdings are at, and I haven't really been putting my feelers out there for any new companies in the last month. I kind of just want to take this time and enjoy the portfolio as it currently stands, and in the meantime, just really focus on the companies I already own. I was actually texting with Russ and Harris about this the other day, and we're talking about creating a challenge for ourselves where we read one annual report every single week, starting with the companies in our portfolios. I think it'd be a great way to get reacquainted with the things I already own and haven't really spent much time with lately, so that's something I might start doing here pretty soon. Now, as far as what else is on deck for this month, like I said earlier, I'm just going to keep adding to Visa every week, and I'll keep buying Starbucks as well. And I also want to finish reading this book on Starbucks. books that I started at the beginning of January. I'm pretty close to being done. I only have about 60 pages left, so I'll realistically be able to finish that off in the next few days. And I'm not quite sure what I'll dive into next after I finish that, but I'm kind of thinking Same as Ever by Morgan Housel. It's his new book that just came out. I think that's going to be the move. This one's kind of jumping out to me right now. Anyway, guys, that's what I've got cooking up for February. And in this next video right over here, I'm telling you about 3 deeply discounted dividend stocks, all of which look like great buys right now in the month of February, and you should definitely check them out. So click right over here to do just that, and I'll see you in the next one.